Good morning, good morning, good morning. Today is Monday. Beautiful day. Every day that the Lord makes is a good day. So I will choose to rejoice in it. We're going to do some live streaming today. We're going to be looking at the charts. We trade the NASDAQ. We're going to be looking at what price wants to do today. Before we get started, we need to look at the news. We need to see if we have any kind of news today. Today is Monday, the 20th, and there really is no news. We have speakers at 10:30, at 2, but these are all basically no news. So we are really going to be focusing on just price action today. Let's see what we got. Let's start at a higher time frame. Now, if you haven't had a chance, check out the last video, cracking the code to 3 ways to find out the bias for the day. And we're going to be using that same thing today. We're going to be talking about that today. That's what we're going to be going over. So let's start out at the weekly. Let's see what we got for the weekly here. Okay, so last week we hit all-time highs, and we are in the current week. Now, especially on a weekly basis, this candle, the next candle would be the candle we're looking for to come into a fair value gap. So this candle is a little suspect for us. It could go higher. It could do a rebalance, an immediate rebalance for the week, bounce, come to this high here, and then continue higher. Those are some options, but really not a lot, especially here at all-time highs. The thing that I do know at all-time highs is you don't try to short all-time highs, even though we might take a short. We're really not looking to catch the top. That's not something we want to do. So let's drop down to the daily. Let's look and see what we got on the daily here. Okay. So from the previous swing, this is a lower time frame analysis. Actually, we can remove that. If we pull back on this daily fair value gap, we come just short of that consequent encroachment of that daily fair value gap. So, and where did we close? We actually closed above the previous day's lows. What's the low for this? The low is 18,633.25, and the close on this candle is 33.75. So we closed at the exact low of this candle. That's just something to note. I mean, really, we can't be like, oh, because of that, we're going higher. I have no idea. Okay. We really don't have much of analysis here. It's also a no news day. So, we could go towards all-time highs. We have all-time highs now here. We'll mark that out. We could come back down and we could feel more of this volume imbalance. So we have this daily volume imbalance sitting right there. So we have this swing low. So we'll call this the previous day low. Previous day low. Right there. Now it looks like we might have already hit the high here. So let's go down to the 4-hour here. All right, so yesterday, if you guys, or not yesterday, if we're gonna skip the 4-hour, we're gonna go down to the hour because I want to show something here. On Friday, I talked about this breaker right here, where we went low, high, lower, low, came back up, hit that breaker. This candle right here is the breaker, and we hit that basically within 25 cents, and we shot down lower. Now, over the weekend and last night, we came up and we hit that level again and have respected it. The only difference is, what did we grab? We grabbed buy side liquidity by just wicking above yesterday's high. Okay, so we wicked above yesterday's high. What hour was that? That was 7 a.m. We wicked above it and hit that breaker again, and we dropped. And look where we dropped into. We are rebalancing this 1 hour. So right now we're in a 1 hour fair value gap. We're also in a 4 hour fair value gap. This is the 4 hour. And we've rebalanced this 4 hour. On the 4 hour, we've rebalanced this area. We could come down to this area, but that's a big move. That's a big move for a Monday. I'm not a fan of that big move. So back to the hour. Really, at this point, we could go multiple directions. Let me give a couple scenarios. Even though this is a breaker, this is also equal highs. I like this to be broken to the upside, and because we're at all-time highs, I'm interested in going higher until there's a reason to go short. I don't know what that reason to go short is yet. I don't know. I'm bullish. I'm bullish, I would say, from what I am seeing here. I like how this candle is now respecting this. If we close below this 1 hour, maybe we go for lower prices. If we drop down to the 15-minute, we could want to rebalance this 15-minute fair value gap sitting right here. That's a possibility. So as you guys can see, anytime anybody sits down, we don't know which way the price is going to go. We got to figure that out. That is the most important thing that we have to do, is figure out where does price, what's the bias, the potential bias on the day. What's the potential draws on liquidity for today? So where did we close yesterday? All right. So let's go down now to the 1 minute, and we're going to pull up, where did we close? So this was where we closed on Friday and where we opened. Closed, open. So we really don't have a new week opening gap. That's basically insignificant. I just wanted to mark out where we actually closed, because see if we have a volume or an opening range gap, and it looks like we're not going to really have an opening range gap. So the next thing that I want to mark out is our midnight open. Midnight right here. Okay. So we're going to mark out our midnight open. It's just something I always do because I want to see where that is, because it's a reference point, especially being the beginning of a week. The beginning of the week, the midnight open for the beginning of the week is an important level. All right, so let's go. All right, now I have on my screen right now, you guys see the 1 minute and the 5 minute, and then right off screen to my left is a 15 minute. That's really what I'm going to be looking at this morning. And I really have identified my higher time frame targets if there needs to be. We got equal highs, all-time highs, and we have a previous day low and the daily fair value gap that's sitting down here. We just don't know which way we want to go. So we really we need more information from the open. Good morning, Honey Roy. We need more information to see where price wants to go. Okay? So that's my opening spiel. I think we've really gotten what I want for today, or let me rephrase it, communicated what I want for our initial conversation. At this point, let's just look at some price action. Let's see if we see any model setups from this breaker. I'm really interested. How did we respond when we hit this breaker a second time? So we came, market opens in 2 minutes. So we got a high, low, higher, high. We didn't break anything here. There's really, on the 1 minute, there's nothing that's visually appealing. 2 minute, nothing visually either, really. 3 minutes, 3 minute, nothing. There's nothing here that shows me we would have had an entry if we were to be playing at 8 a.m. this morning. So that's always nice. From here, we have a breaker, a smaller breaker on the 15 minute. Let me pull the 15 minute. I'm seeing that right now. All right, so 15 minute is right here. All right, we got, what do we got? 17 seconds before open. Let me point this out. High, low, higher, high. Fair value gap right here. We've broken into that fair value gap. There could be reason to go back up into this fair value gap in the 15 minute. 15 minute SIBI. But we could, so let's see what happens. Open's happening right now. Let's see what we got. We've grabbed these equal lows right here. We tagged these. We're still in that 1 hour fair value gap. So we could still find some support here. It's hard to say that we want to go lower when it literally would be a guess at this point on where price may want to go. So we can't. I'm not willing to risk any money on that. Okay. So, but it absolutely could go down. I mean, that's the thing with it. I mean, you're going to hear me. Well, it could do this. It could do that. That's because it could. But here's the 15 minute. I like the way this looks here. What does it look on the 5 minute? Does it look better? Okay, so I like the way this 5 minute looks with this a potential breaker here. It overlaps. It overlaps this 15 minute. The reason why I'm showing you this for a bearish breaker is because we have almost no structure for a bullish, for anything bullish right now. Let's actually put some time into that. Let's see if there's any reason what we could do. I don't like that. Don't like anything over here. We've already used this on the 1 minute. Yeah, it could come back down and rebalance this under this 15 minute, reach for this. It could do that if we're in a if we're gonna be doing like a seek and destroy type day where we don't run. I don't see any reason why the higher time frame is showing the 1 hour is finding support. So we're still on the 1 hour. This is the 1 hour fair value gap and nice little push. I like this push right here. So let's see if we got. This would be a nice. We just closed that 1 minute. That would have been a nice entry. All right, so we're gonna look at this right here. So we got a low, high, lower, low sitting right here. I'm gonna put this right here. You could also see this right here. This is also one. I'm just marking it out for right now. Oh my gosh. I'm looking at lower time frame, or I'm looking at the lower part and I missed this entry right here. That would have been really nice. This. If you're looking at this chart and going, what is he talking about? The close of this fair value gap right here. I literally came back, looked at it right after this was taking off. It closed right here, and I'm like, oh, I really was not ready. for that. That seems to happen when I'm talking. Maybe I should talk less. Okay, there's that one out. That was the move. That was the move. We're probably going to hit these equal highs right here. These relatively equal highs. That was a nice candle. If you record your screens, go back and watch how this formed, how we made these lows, and then we just immediately take that. That was, I wish I was ready for that. That would have been a beautiful trade. No worries, I appreciate it. No faith required. There we just hit a high right there. So if you were in that trade, that's where you'd want to sell. Now that was just hit. Beautiful. I mean, that is the stuff right there, man. That's the stuff. Try to log that in your brain, what you saw here. We grabbed these equal lows. It turned immediately rebalanced or inverted this. Break even would have been right here, and it never looked back. Well, that's okay. Now, I mean, this is a lesson in itself. How do you respond when you miss a trade? Do you try to chase this? Do you wait for the next setup? Do you get off and walk away? The last two are the best options. Don't try to chase this. Do not try to chase. I mean, when you see this, I mean, everything inside you wants to say, get in, it's going to all-time highs, it's going without you. It certainly could. We have, let's see here. Let's get rid of that. Irrelevant. We just exploded through that. Exploded through that 15-minute as well. We have 15-minute right here. Good morning. Hey, no faith required. My strategy, I am a scalper. I don't look for long holds. Depending on the day, if there's news days or no news days, on no news days, I'm really looking for quick, 10 to 20 handles. 10 to 20 handles is really what I'm targeting. Unless you have something that has high momentum like this, this, I'd put my stop to break even, and I would have wait till it hit this high, because this was the only swing high that it had any interest in, and it went to that immediately, and it is still pushing higher. So that's what my target would have been, and that would have been, let's just say we get in right there to that high. That was 34 handles. So anywhere from 10 to 30 handles really is my target. And I would rather be consistent at that than trying to hold for longer plays. That's all I really need. I mean, if I can copy, I've already done the math. If I copy 10 accounts on Apex, and I do 1 trade, 2 trades a week, making 10 handles, that's going to be a lot. That's $4,000 a week by just doing 10 accounts, 10 handles twice a week. That's $4,000 a week. You do 30 handles, well, now you're making, what is that? 6,000, 12, that's 12,000 a week. Twice a week. If you do that twice a week. So I'm a scalper. That's really all I'm looking for, is quick in and outs. Something I don't like holding long. I will never ever hold overnight. That's just not me. If you guys pull up the 15-minute, I'm not going to pull it up because I want you guys to see it. I want you to look for it yourself in your own charts. I stream here, but if you're watching my screen, you ain't trading. I mean, it's hard to trade on your screen when you're watching my screen. So pull up your 15-minute and look where that 15-minute SIBI is sitting. What is behind that 15-minute SIBI? What is behind that 15-minute SIBI? What PD array is sitting behind or to the left of that 15-minute SIBI? I would like for it to find some support here. If you're not looking at that 15-minute, it's a mitigation block. See if you can find that mitigation block. That mitigation block is a PD array that price finds resistance at, and that's exactly what's happened. It found resistance on that swing low. All right, so now we have a high, low, low, high, lower, low. The 15-minute also is a breaker, so we could find some support right at this high. It's just, I'm a little uncertain. The price could do anything at this point. $15-minute right here. Look at that. Here's the wick high of this candle, and here is our high, low, lower high. This is a mitigation block, and this swing low from that mitigation block, this swing low comes in at 18, 7, 10, 25, and this high comes in at 18, 7, 11. So it came in really, really close to that. It went past it just a little bit. Right there to there. Resistance point. Things you just want to be able to see on the charts. Although, what else do I see here? I see a high, low, higher high. Or excuse me. I don't want that. I want... I get these backwards sometimes. Here's a low, high, lower, low. I'm getting tongue twisted here. So low, high, lower, low. This is considered a breaker. We did grab liquidity, find support on this 1 hour, but this is a 15-minute time frame. So you would need to wait 15 minutes for maybe even 30 minutes to an hour for price to want to come back down, find support here, and then move higher. So that's why I really don't use the 15-minute to determine where my entry is going to be. It helps me determine my bias. For those of you watching, where are you watching from? Where are you located? I am in the United States, the central United States. I'm in Nebraska, the Cornhusker State. Tennessee. Awesome. My sister lives in Tennessee. She lives in Nashville. I'm marking this out because I'm marking this 5 minute out. There's a good chance price is going to come into this level and do something. Price is going to come into this level and do something. I don't know what it is, but I'm just marking it out. I mean, it's a giant 5 minute candle. A giant 5 minute fair value gap. I mean, they're significant there. All right, I'm marking out this right. I'm marking out this high here because it is a lower level buy side liquidity. Okay. Now I'm bullish on the day. Let's be clear. I'm bullish on the day. We have a high, low, higher, high. This is the potential of a bearish order block. If price shoots below this level, it now becomes a potential area to go short. Am I going to go short? No. I'm not. Could it just drop like a rock? Yes. And I probably won't take it unless it looks really, really good. That's because I mean, you can't ignore this giant green candle. This right here is a very bullish signature. We're re-delivering from a 5 minute. We just broke through several premium PD arrays. I mean, I'm looking for all-time highs. That's really what I would be looking for. Here's a we're bouncing off of that 1 minute right there. See if it wants to find some support there. I wish I was in that, man. I can't. I wish I was in that. If you're on Twitter at all, if you go on Twitter, I mean, you'll probably see multiple people have taken this trade. That was beautiful, and the setup was right there. The setup was right there. We are coming up on the 10 a.m. macro. The 10 a.m. macro is just about here. We're technically in it from my standpoint. 9:45 is the beginning of that, is when I begin looking. Look when this high was made, 9:45. I always like seeing that. When you see a high forming within a macro, I just take note of it. It doesn't mean anything, but it could be something to just take note of. Anyway, Daji D, he ended up taking that. That doesn't surprise me. I mean, that's his model. That's his model right there. Is the close of that and then target. Yeah. That's cool. That's encouraging to know that I had something somebody else had. Okay, so there's a very bullish reaction. This is why you can't short. Even if this came down and gave me a signal that price wanted to go down here, I'm not going to short that. Price could do this at any freaking moment. I want to see if this closes above this 15-minute. We got 9 minutes left, though. What do we got? Am I missing something here? Got a swing. There we have a swing high that's right in the middle of that 15-minute. I don't know if that's really of any significance. It is within a fair value gap, but, I mean, it looks like price is really just pushing right through it right now. This is just, I mean, when you look at this and this, knowing that we have all-time highs right here, where do you think price wants to go? I mean, it looks to me price wants to hit all-time highs. I don't have an entry. I don't have an entry. And for me to want to take an entry, my rule that I tried to go by, I'm not 100% on it, is I want price to come back down to equilibrium. So right here is equilibrium. Right there, EQ. And as price continues to move higher, then we use that, we move it. Watch the, look at this, and this is going to be a guess. Watch, okay, I'm going to show you something. This is something I use with, there's nothing I can enter, guys. I'm talking here, but there's nothing I can do right now. I want to show you something this is something that I'll do. I'm going to take this equilibrium level, and I'm going to put it right somewhere in this area of consolidation. Look where that, if I put it right in the middle, approximately, look where one standard deviation is. So from this to here and from here to here is all-time highs. So price, I don't have the language for this yet. I'm still trying to get the right words for this. But price is very symmetrical. It likes to run, the numbers typically add up. That's why when you see it stops, it hit a high tick for tick. It does that all the time. If you take equilibrium, or you put the 50% mark here, or you do an extension Fibonacci tool, use the extension tool. Let's do a target fib right here. If you do that and you do, let's just say from the swing low, look how close the 1 standard deviation is to the all-time highs. This is a clue. This is a clue that there's a high probability that price is going to want to hit there. Because why I'm saying this, when numbers match, when there's congruency on different tools that you use, it creates and tells you there's a higher probability that something is going to play out. So my analysis is we're going to hit the all-time highs based on this swing low to where the consolidation is to where the next spot's going to be. This is the buy side of a market maker sell model. This is the buy side of a market maker sell model. How do I know that? Initial consolidation. We have, or initial consolidation, or what ICT calls accumulation in the power of 3. We have our accumulation, we break higher. ICT would actually see this as the reaccumulation, and he would have taken this as an entry to go long. I'm not there yet. That's not what I've been studying. That's not my model. I trade the breaker. Once we hit a key level, what is that key level in this case? The key level is all-time highs. Once we hit that level, we need to now watch and see what happens. Does price continue higher? Does it find a level of consolidation? Or does it give us a smart money reversal setup? So when price hits here, I'm now looking for a smart money reversal setup for the sell side over here. And then I'm going to match the right side of this curve with the left side of this curve for my targets. So you see this from this low to this initial consolidation as, oh, well, I guess it could go back down. No, ICT is seeing this as, oh, well, we're hitting all-time highs. Look at this candle. Let's find an entry to target that. I'm just not ready to do that. I'm just not there. But when you see these levels just match, it's high probability we're going to hit this. At least for me. High probability that that's going to be hit. Other things that I want to point out because I'm using this as reference for me, is look at where this initial retracement happened. The retracement happened at this 15-minute, no surprise there. But guess where it stopped? At the first fair value gap. We go higher. Where does price stop again? At the first fair value gap. This tells me that the first fair value gap, when price is actually moving, is very, very important. You could see a big rip like this and then it come all the way back down. That's possible. But when you have when the algorithm is giving a set of instructions and it's like, oh, I'm running to a specific level, and you got a movement like this, it's going to find that first fair value gap and find support there, and then it could potentially go higher. It's not my model. It's not what I am taking entries on. And if I was less mature, I probably would have tried this and I would have won, and then I would have been like, oh, I can do this again, and then I would have lost it. So I stay out of it because I need to focus on my model, and I'll probably add this as one of my models that I end up taking later down the road and really focus on this strategy. But right now, my strategy that I'm focusing on are two. It is the breaker, bullish breaker, and bearish breakers. And then I'm looking at inversions. Inversions after we hit a level of liquidity. So this would have been perfect. We have equal lows. We stab through it. We leave a fair value gap, and then we just explode right through it. That was the trade. That was my trade for the day. Take it, close down the charts, walk away, enjoy the day. That was the trade. Now, for the benefit of you guys get me a little bit longer. where we're going to talk about charts and we're going to price read and we're going to get better at this. This is what, and when we're first starting out as traders, this is what we need to be doing for hours, is reading price, analyzing it. So now that we have this idea, let's look at this. Let's look at this fair value gap. Let's see what price wants to do with this fair value gap when it touches it for the first time. It's not a guarantee, but what's right below this fair value gap? This makes this an even more significant fair value gap. What's right below it? Boop. Bullish breaker. Excuse me, a bullish order block. This bullish order block right beneath a fair value gap makes this a high probability fair value gap. When you have a target, let's see, 738. So we're 22 handles. This is of real interest to me. We just hit this line right here is a swing high that I wrote on here. Just a short-term swing high. So you can see how price respected that swing high. So we're seeing a lot of discount PDRAs being respected. It wouldn't surprise me if it doesn't hit here and it retraces back down here. That's what I'm looking for. If we retrace back down here, we find some support and we get an inversion in this place, in this move, let's say a bullish fair value gap right here, like this one, that's created, and then we break through it. That's, a bearish fair value gap. So if we get a large candle right here and we consolidate here, and then we have a fair value gap right here, we can take that into the highs. That would have been a potential move. Did we bounce right off of Friday's close for that move? That's a great question. Friday's close, no, Friday's close was lower. Friday's close was way down here. Friday's close was sitting around 18,633. Are you talking about which bounce are you talking about? Oh, you're talking about the initial one right here. Yes, we came in very close to where that is. Look, let's do this. What? Why is this? Get out of that. This was the close right here. So we were really close to it. What do I have on? I have regular trading hours. So I closed down the post-market and pre-market. So this was the close, but look what it actually focused on. Oh, well, that's the close. But yes, if we look at the close of the 4 o'clock, we hit right here. So yeah, it found some support there. We also have the 1 hour. Here's why I don't use the lows and highs as guaranteed place of turning points. I would rather look at this fair value gap. And so I looked at this fair value gap. So fair value gaps are my area of focus instead of just looking at the high or the previous day's lows and highs. I'll use the previous day low and high for targets for exits and for basically for exits that I would take. You can also use them for entries, but I will use fair value gaps and then use the close as correlation, as additional correlations that says, hey, this is a potential entry. But my entry is not based on, I'm not getting in because it hit this level. I have an entry model on top of that. Okay, look where we hit and look what we left. I don't like where this fair value gap is, and it's too small. But look how we bounced off of that. I am not looking at this 10 o'clock candle and that tiny fair value gap as an entry right now. I don't like it. It's too small, not as significant, but we did find support here No surprise. Especially we're so close to all-time highs there. Five minute, we re-delivered off of the 5 minute fair value gap. That's also very attractive. That makes this more attractive. We got 27 seconds on this candle, and we're so close to this swing high. So you could take this as soon as we hit the swing high. You're moving your stop to break even. High probability you're going to get stopped out, but at least you can move your stop to break even for the potential of hitting this high. So if we get an aggressive candle and we're not just ticking slowly up past this, I may consider that. But there's a lot of things that need to happen. And especially on that rejection, I'm not a fan of that rejection right there. But you can see this 5 minute that is sitting right here that we just went into. I'm putting this on for your guys' benefit. This is a lot of stuff on my chart here, but I'm trying to show you guys what I'm looking at so you guys can see that on your own charts. Right? So this 15 minute really was blown through. I'm going to take this 15 minute off. Irrelevant at this point. See that tiny fair value gap right here? So high, low, higher, high. I would not be taking this because we got all-time highs so close here. And it's almost insignificant. High, low, higher, high. We break the low. We come back up into that fair value gap. Wick up into this fair value gap here. That's a model 2022 from ICT and a move lower. I'm just not taking that because this level sitting right here. It makes it lower probability on my part. This is, guys, this is trading. A lot of sitting is like, when is he going to take a freaking trade? I don't know. I don't know, and I want to be really careful. I like how we're closing here. I like how we're not. Look at that reaction. Look at that. That's a nice reaction. Nice reaction to this fair value gap. Tapped into this 3 minute fair value gap there. Now, you might think, well, could I take this one here, this fair value gap right here? Yeah, but what's just stronger? Right now, this fair value gap rejected this candle right here, and it's rejecting it again. So it makes this fair value gap less attractive, and this one more significant. Now that we have more information, this fair value gap that I've marked out has more significance because of the multiple rejections on it. This also is a significant fair value gap. Why? It's the first fair value gap from making our highs for today, from today's high, and we've respected it 3 times so far. No, 1, 2, 3, 4, 5, potentially 6 times. Again, bullish indicators the price wants to move higher. We just don't know when we're going to get in. It could still wick lower and close back below it and wick us out. That's why we need a model for an entry. A model that has a higher probability that we have a less chance of seeing a wick lower. There's always a chance, always a potential that price could wick lower, hit our stop loss, and then move higher. But the reason we have models, or we have a specific strategy for an entry technique, is to reduce those probabilities that stuff like this happens. Making higher lows. We got our low, higher low, higher low. Let's see what this candle does. I am watching this. I'm 50-50 on if I'm going to take an entry here. It's going to be probably a split-second decision, if I'm honest, guys. I'm not a fan of taking them this high, but we have a high draw on liquidity, and depending on how aggressive a candle is, it may be a reason. I'm not 100% sure what I'm going to do. I mean, it's literally, this is a 50-50 type entry. If you're okay with 50-50 odds and you're not going to get pissed off at somebody taking a 50-50 odds and it turn into a loss and be like, well, this guy sucks, well, then that might be an option. Yeah, if the dollar's falling, that is a good sign of higher prices over here. Yeah, fair. Let's do that. This is going to be off screen. I apologize because it's on another screen of mine. But let's look at the correlation between S&P and the NASDAQ. Okay, pretty in line, but it's still making higher highs as well. See all this? See all this crap right here? See this tick, tick, up and down, up and down, up and down? Price action I hate. Next thing we want is a nice, solid, bullish or bearish candle that tells us price wants to start moving again. Again, more waiting. Ah! Yeah, I looked at the S&P and NASDAQ and look at correlation, see if we have any, what's the word I'm looking for? If you guys remember, when one makes a low and the other doesn't. What do we call that? Divergence? Is that what it's called? I'm having a blank on that, sorry. Look how we are making, we have equal highs, we have another high, another high, another high, another high. We call this a low resistance liquidity run. this is a setup. So what I potentially would want to see is a massive stab lower, making everybody think we're going lower, and then it reverse and run all this liquidity targeting these highs. SMT, thank you, BF. SMT. So that's the only thing I'm liking right now. If we were to stay right in this consolidation and shoot higher, that's less interesting to me. This is very key. Pay attention here. If we are in this consolidation right here, boom, right? We're in this consolidation and we get this large green candle right here. I'm less interested in that because we missed a step in AMD or in the power of three. It's accumulation, manipulation, distribution. So what I would prefer, it doesn't mean I wouldn't take it, but it just makes it less probable and there's more risk on the table in my mind because I don't know what's going to happen. If this candle runs these lows here, is very aggressive, leaves a fair value gap, and then inverses it, it makes an inversion on that, it makes that entry so much more attractive because we can see this as a manipulation lower, and then it's saying, "Oh, I got you all lower. Now I'm going to go higher. I got your stops. I have you guys in a short position. Now I'm going to go long to get you out of that short position to hit your stops." And then it runs this low resistance liquidity. That is attractive to me. That's the stuff that we want to look for. Now, it may not actually reverse. It may just want to go lower. And we've seen, I mean, if you look at any chart, you'll see that happen all the time. It lacks a daisical. It looks just going, just slowly dropping. Then all of a sudden, it just collapses. That's a possibility too. So these are all potential scenarios that we look for in price to help us decide if we're actually going to take an entry. Yeah, SMTB or smart money technique. Smart money technique is what ICT calls that. Okay, so see how we wicked lower. We didn't grab this low, but this is still, I still like this. It grabbed 1, 2, 3, 4 equal lows right there. And now look at this candle following that. That's the kind of stuff, signatures and price, that grab my attention and says, hey, Tyler, pay attention, see what happens. Doesn't mean I'm taking anything, but it means freaking pay attention. So if this runs without us, it runs without us. If we're somewhere around here, that may be, it's still 50-50. Oh, man, don't go without me. See how I'm talking? I'm talking that way because I missed the first move. If I made that first move. All right, so this is a potential entry. I want to see it retrace a little bit, and then I'm probably going to take an entry. I want to see it drop just a little bit. But you could take this entry right now. All right, I'm going to take an entry there. Stop loss will be as soon as we hit these highs right here. I will be putting a stop loss in.
Order submitted.
To break even. If we close below this small fair value gap, then I'm out. Okay? That's my exit. Now, the thing, while I'm watching this, the thing I'm looking at is if this turns into a BPR. If this closes down here, that's not a good sign at all. That's not a good sign. So I'm looking at why would price want to go lower. Right now I'm liking this reaction here. I want it to stay high. I want it to push higher right now. I want it to be fast. I want it to be fast. I want to move my stop. I want to move my stop to break even. So I'm looking at this high being right here. If we close below that fair value gap, okay, we didn't. We're still respecting it. That's the fair value gap I'm watching. $14 seconds. We're below this. There's probably I'm probably going to get stopped out and I'm going to close it unless it retraces really fast. See how it closed in there again? Closed in there again, so I have to wait another minute. More risk on the table. Or not more risk, but it's still on the table. I like this. I want it to be aggressive and I want it to push higher right now. I don't like that. I don't like that reaction right there at all. I'm still holding. Once we hit that high, it stops moving to break even. If it comes back down and stops me out at break even, I'm totally okay with that. I'm totally okay. All right, stops moving to break even right now. Stop is break even, and we could, if we don't run these highs right now, I will get stopped out. Targeting all-time highs, stops at break even, and we'll see what happens here if price wants to go or not. See if we get stopped out. Stops at break even. I'm at 18,750 is my break even right now. Actually going to put it one tick above just so I can cover any commissions if we decide to just drop, and it looks like it wants to. I don't like the way this candle's closing right there. Makes it a lot easier to hold when you know your stops at break even. It really does. And that's why I do it. I want it bounce right here. If it pushes right through, then I'm out. Like I said, my stop and my
Order filled.
okay, I'm out. Break even trade right there. That's okay. That was the setup. I mean, it looked good. Price respected. Break even trade. Why is it a break even? Because it hit this level right. Where was it? I'm sorry, because I'm trading. I'm trading on the chart I'm executing on is a micro account, And so on the micro account, it actually hit my break even. Well, right there is where NQ actually hit the break even. So I would have been out either way on that. So micro account hit my break even before it did on NQ. But I still was in right around, actually it was the same place, 750. Yeah. So I was right here. So we already hit it. My entry was right around here. I remember that. This is why if it hits your stop loss, guys, after it hits a swing high, after we hit a swing high, it needs to run immediately to the next level. If it doesn't, there's a good chance it doesn't want to go that way and it wants to retrace. How far, we don't know. And I'm just not willing to be a part of that. I don't want to be a part of that retracement and have to hold through that drawdown. So we hit the high, stops immediately to break even, and it needs to hit this next level immediately, or if it retraces, then it probably wants to go lower than where my break even was. And that's why we do that. That's why we have that there, to protect us from this, what we're seeing right now. This could just shoot way lower. And if it does, look what it's actually leaving behind. A high, low, higher high. Fair value gap to the left of this swing low. That's a breaker. That's a bearish breaker right there. After some consolidation. So potential entry for a short, which I do like. I've seen price come this close to all-time highs and then run 300 points the other direction, 200 points the other direction. So it's not because of the unwillingness right now to go higher, this is now becoming attractive. This is now becoming attractive. It also is right next to this level right here, which this is an inversion. If market closes below this, that's an inversion that you can target these swing lows. I'm not taking it on this. I really want to look for it to come back up, especially if I'm going against the trend. Because we know what the draw on liquidity is. See that? See how that? This is why we just mark it out to see how price is respecting these. It wants to hit this level. It wants to hit this level. I don't like this breaker as much because twice we closed above the swing low. I really like the breaks to close below it. That makes it more interesting for me. I respect the minimum of the bearish breaker. Let's see. So the bearish breaker you're referring to is the low, high, lower low, I'm assuming, right here. So for those of you on stream, what Raul is referring to is this breaker here. That's the breaker he's referring to. Is he bearish? Oh, no, bearish breaker. That's a bullish. This is a bullish breaker, I'm pointing out. Which doesn't look that bad. Doesn't look that bad. Yeah, sorry. When I heard you say it, when I reread bearish breaker, I saw that what you're looking at. Your bearish breaker would be high, low, higher, high. So I'm assuming you're talking about the 957 candle, Raul? Or what minute candle are you referring to? The 1 minute, and what time? $9.57, yeah. Yeah, Raul, I mean, I totally get what you're saying. I don't do the inversions of breakers. I haven't gotten that far yet. But it looks like it's respecting the mean threshold of it for sure. Redelivering from this 1 minute. See how it reached way and it filled this whole 1 minute in? That is what I want to avoid because, man, the drawdown from 750 all the way to 740. So that's 10 handles. It's not bad. I have a 10 handle stop loss, but if I can avoid drawdown altogether, I'm going to avoid it. Hang on 1 second, guys. My wife is calling. Another set of low resistance liquidity sitting right here. Right now we're in consolidation. For me, there's nothing to do here. Nothing to do. It's like price knows it's going to hit there, and the algorithm knows everybody wants it to hit there, so it's just going to run sideways for an hour and a half, and then in a matter of 15 seconds it's going to run those highs really fast. That is manipulation for you. Okay, 1 hour. If you guys pull up the 1 hour right now, you'll see a giant green candle on the 1 hour. When you see a 1 hour have a giant green candle, I mean, it is definitely a bullish signal. Bullish. So we're just looking for an opportunity to get in, right? We had our opportunity at first. We wanted to hit the highs, but it didn't. So we got stopped out. Now we're looking for our next opportunity. There's nothing here for us to really put our feet in that gives us confidence towards the high. Unless you're like, well, I know I'm going to hit the high. I'm going to go in with one micro contract and I'm willing to hold whatever drawdown. Sure, by all means, go for it. That's not me. I want more precision. I want high precision. And I'm okay with break even. I'm okay with break even. That's break even is better than a loss. Holy macaroni. I can see it just shoot straight down, grabbing all that liquidity there. If it's going to do this, really what I wanted to see is that candle to come down, run this liquidity, but leave a fair value gap. Well, it just eliminated that altogether right there. If you guys haven't seen the last video I put out, I think I put it out yesterday. There's some really good lessons in there. I reviewed a tweet from Trades by Matt. He lost $91,000 on Friday, and he posted about it. And I did a review and put some commentary behind it. So if you haven't checked out that video, it is worth 10 minutes of your watch. There's fantastic lessons in there that when I was recording it, I was listening to it multiple times, or when I was editing it, listened to it multiple times, because it's a fantastic description of how you can go and tilt so quickly and then end up losing thousands of dollars because I need to get it back. I'll just try to get back to break even. Oh, cool, man. I appreciate it, Ro. Yeah, it's a great video. Now, if we're looking here, just another thing to talk about that I'm thinking about right now. Let's say we don't hit these highs yet, and we have an aggressive candle that closes below this 1 minute fair value gap. I'm still looking at this 1 minute fair value gap right here, but we could easily close below this, wick below this, and then close back up in this 1 minute fair value gap. So the potential trade idea would be go short on this close, sell at this low or this low. Sell at this low or this low right here. And it still could go lower, but the point is you're almost guaranteed there's a higher probability that it hits, if it closes below this box, that it's going to hit this level or this level. So that's something that I'm looking at right there. Ideally, when I would want to see that happen is between 10:45 and 11:15. But you got to understand, if you look at the higher time frame, the 1 hour, I mean, look at this. Look at that 1 hour bullish candle. That says I'm going to all-time highs. That does not say I'm shorting here, get in for a short. That's not what this candle says. So even though it says bullishness, where's our entry? Where's our entry? It could be anywhere in this candle. Anywhere in this one-time candle. We just don't know. I mean, ideally, we want that to be ideally, we want that to be above the consequent encroachment. So I would say from this high, or from this consequent encroachment, the middle of this, to here. Somewhere in here, we could potentially get another long to go higher. And that's what we look for. We just don't say, oh, bullish 1 hour candle, get in long. No, that's a recipe for getting stopped out. That's what I used to do. Oh, man. Talking out loud of how I used to trade. Just honestly embarrassing. Everybody goes through it, but it's just, I gambled my account for so long. I don't want to gamble anymore. Man, I'm really wanting an entry here. Really wanting an entry. Let's see here. Just responding to some messages, guys. When you're on stream for an hour and a half, you got messages. I also run a real estate business. 941, we got, see how it just out of nowhere, just, oh, I'm just going to, boom, go higher. Don't chase this. Don't get in. We just grabbed above this high and it's stopping. It could absolutely hit this, but it wouldn't surprise me if we just turn around, come back down here. Yeah, we are very close to that macro time, but it's 3 minutes before right now. See that? Don't chase that. See how it's gonna stop you out. Boom, right there. I mean, you get in somewhere around here, 858. Now you're 52. Yeah, it's 6 handles of drawdown, but who wants drawdown and you're like, oh, is it going to just totally reverse on me? You let your emotions get involved because it's not a specific model, and then you get stopped out, or you stop yourself out because you don't want a bigger loss, and then, oh, crap, it's now going the other way again. I should have stayed in. Mind games. Stay away. Don't play those mind games with the market. Yeah, we should hit this. Come on. There it is. All-time highs. Again, May 20th. Jeez, there's nothing here. I'm looking for a bullish order block that we could see it for an inverse, but there's nothing. See how we wicked above, but we haven't closed above it? Just noting, not doing anything with it, just noting it. ES, let's look at, did we make all-time highs on ES as well? Did we hit all-time highs again? Yeah, looks like we did. Oh, no, wait, did we? This could be an SMT. Yeah, ES did not make all-time highs. ES did not hit all-time highs. So either we hang out here and ES eventually hits it, or we have an SMT for a move in the other direction. We don't make trade ideas solely on SMTs on ES and NQ, but it is something we note that can confirm price is going to move in the other direction. So if we start getting some aggressive movement downwards, that I'm interested in that. I'm interested in that because we didn't hit all-time highs. We are sitting 3 handles away. Yeah, we're not doing anything here until we start seeing some movement. BF. Yeah, so 3 swing high points. He's referring to a long-term high, intermediate, and intermediate swing highs on the left and right side of a long-term high. We do want to note on a lower time frame though, BF, I will say that we can look at this on a lower time frame and we can get a trade idea out of it. On a long term, on a higher time frame, that's more of a signature in price that we may see lower prices in a big way, not necessarily short term. But short term, we can take just a quick stab through, lack of momentum higher on ES. And if we see some displacement downwards, that's something for us to consider for sure. You also have a 3 drive pattern on ES and NQ. 3 drives pattern is this. We got 1, 2, 3. 3 drives pattern. I don't do much with the drives pattern. It's just something I see in price now because that's what ICT taught. We are in the macro now. But because of how much it's not moving away, may tell us that it's waiting for an ES to hit the highs too. That could be. We'll see. Sweet, BF. But it looks like it might want to actually push higher here. We'll see if it actually does that. 1 minute. Is that a fair value gap right there? Oh, we made equal lows right there. Yeah, for those of you watching, when you see BF say next macro, what he's referring to, and the way I look at it is, price typically will run, not fake you out during these macros. So price may just run right here. ES still hasn't hit its high, but it could make a high right here and then start running the other direction. I like if this inverse stays open, that would be nice. Or if this fair value gap is formed right here, that would be nice. That would be very appealing. Looks like it wants to close it. Do I trade after 11? Yeah, but typically not between 11:15 and 11:45. I would prefer not to. I like this inversion. If we close this, I'm including this gap here, as you can see, because we have a volume imbalance right there. Stops would be to break even right here, and target would be down here. It's honestly really risky. We still do have an SMT on ES, especially with ES not hitting its high. I'm leery on going short this quick, specifically in keywords this quick. But it is an entry. So no entry. No entry there. See how the inversion, see how that protects you? See how that protects you? I mean, it looks like it wants to go lower. But you have to wait for the close. And this close did not hit this high or the closing price of this candle. Tells us that price is still respecting discount PD arrays, because this fair value gap is a discount PD array. So as we see discount PD arrays respected and it goes higher, we want to see discount PD arrays being disrespected and premium PD arrays being respected for price to move lower. It still could get disrespected right here. Still nothing. I don't like how I wanted it to be quick. You know how fast that last trade was? I'm just going to go there real quick. You see how fast this trade was right here? Oh, wait. See how quickly it shot up in there and closed? That's the kind of movement I would want to see. But we're not. We're kind of just slow. Now we're just sitting right here. It could close in 30 seconds here and then still go. But you see how you can get different levels of confidence based on how the candle moves? That's the kind of things we're looking for. Kelsey, hey, thanks for joining. Do I trade for a living? I am in transition to make this for a full-time living. I currently am a realtor. I help people buy and sell real estate. But that has allowed me to dedicate my mornings to trading. So I trade. I mean, the amount of time I spend trading, it's full time. But I also have other sources of income. So I'm not employed by anybody. I'm self-employed. So it gives me that flexibility to be able to spend my mornings here doing this. All right, so we grabbed this, we stabbed this low, and we came back up. This would invalidate the trade. So I don't have a short idea right here. No short opportunity in regards to this fair value gap or this inversion gap. I will just mark this out right here as equal lows. There's the equal lows that are hit, which also gives us a potential high, low, higher high breaker. I'd like to see a nice fair value gap left right here. I would like to see this push lower and then come back up into that fair value gap, hitting this level here. I will take that as an entry. You could also see this. Technically, we should be looking at this candle right here. This down closed candle is the lowest closed down candle. So price could come back up to that level, but I'm just referencing this one because I want to see a fair value gap. And I like when I see fair value gaps on the right side and the left side. I don't see a one on the left side, so that's okay. It just doesn't make it as attractive, but it's still something something you could look for an entry. Targeting some of this liquidity that's sitting right down here. Okay, so I like this. I'm going to take this as an entry, guys. If we get right back up into here.
Order
All right,
filled.
I'm going short right there. I'm targeting this equal low here. Targeting this or this level here. Stop loss is a 10 to handle stop loss. 51. 61.
Order submitted. Order submitted.
Okay, I like this push. Let's see if we can get this to push. This is in the macro, so this makes it more interesting and a higher probability that it at least wants to run to this low right here. So that's what we're watching for. Price still could come back up and fill this volume or this fair value gap right here. It's allowed to do that, but I'm hoping that price just wants to run right now. I'm hoping that price wants to push away faster because it still may want to go higher later. I'm targeting this swing low. It's not a full 10 handles, but I'm okay with just grabbing that and taking that out of the market. Because that's the initial swing low, especially if it wants to go higher. And we also have a fair value gap right here, so it may not reach this. There we go. All right, I am out on that trade there.
Order canceled.
Targeted that low right here. Price may not want to go all the way down here because this has found some respect. So it looks like it is going to. You could definitely still hold this. It's a no news day, so I'm okay with being in and out on no news days. So my entry, let's show you guys this. My entry was on the top of that wick. My stop loss was 10 handles, and my target was that level right there. So I got 8.5, 8.75 was my target. Yeah, it's a 1-to-1, but that's okay. 1-to-1 is really your risk to reward, 1-to-1 risk to reward. But I'm targeting liquidity. So knowing that we did hit a high, we definitely could run lower. ES did not hit a high. Reason for price to run further. No news day is my big thing on deciding if price is really going to run. Sorry for that background noise for that door, guys. My wife is walking in and out of the house. Price is moving. There it is. So if I had more than one contract, I would have sold one right here, and I would have held another one for these lows right here, and that target would have been 20 handles. So because I'm only trading one contract, I'm in and out on one contract. I can't scale on one contract. But when I get to the point where I'm doing multiple contracts, I'm doing one contract on multiple accounts. So I have, how many accounts do I got right now? I got 1, 2, 3, 4, 5, 6, 7. I'm trading on 7 different accounts with one contract. So that trade right there, guys, I have them on many accounts. Some of them I'm trading 3 contracts on. So let's see, 470, 300, 600. I mean, it's close to $1,500. That trade made me $1,500 on one contract, only getting 8 handles. You can be profitable in this, guys. Don't think you have to overdo it. I got to get bigger wins. I got to go big or go home. Base hits. Man, I'm getting passionate and excited about this because I wanted to win so quickly. I'm like, I need to make profit so fast. And because of that, I oversized. And because of that, it got my emotions involved in the trades, and I wasn't willing to let it play out with what I wanted to see. Now I've just decided I'm okay getting 10 handles. I didn't even get 10 handles on this one, but I got a win, and I was trading multiple accounts, 7 accounts. One of those accounts, the one that I'm executing on, is a funded account. It was in drawdown, and so I'm only doing one micro. So I'm building that micro account back out. Then I have a couple other funded accounts that I'm trading one contract on, and then I have some evals that I'm trading three contracts on. So because of that, like, you can see the potential that one 8-point trade can be $1,500. That's enough to get out of your job, man. That's enough to get out of your job. Man, whew. And look, have we hit that level? Have we hit that level? No, I'm not saying this to stick it to anybody, but this is my point. It's a no news day, and it doesn't have to run. We just know we're going to get a little bit bigger move during those macros, and we came back up. Let me show you how I entered this, okay? So price came below here and closed right here. After it closed, we opened right here. As soon as I saw price wick up into this level, I went short. Because I'm like, if this wants to run, it's going to run right now, and it may not give us an opportunity for price to come back up here. And that's exactly what happened. Price did not come back up to the breaker before it hit this low or this low down here and leaving these ones open here. Now, price may come back up and now hit this level. We're at 11 o'clock. Price could still come up, hit this level. In fact, it could come up into this fair value gap that it left right here. And guess what this is, guys? This is another trade opportunity. This is another trade idea. You wait for price to come back up into here, and boy, oh boy, you're doing another breaker short. You're not getting in on the first stab into this. You need to see it stop and then begin to go the other direction. Don't wait too long, because then you're going to get an entry down here. And the reason I'm saying this is we're in a bullish environment. We're at all-time highs. So going short is risky. So you got to be aware of that risk. But this is a trade idea. I'm not going to take it. My hands are done. I am happy. Thank you, Jesus. I'm happy. Even with just 8 points, guys, man, when you can get happy for a small win like that and be like, I'm done, I'm going to come back tomorrow and I'm going to do it again, guys, your future is going to be bright, baby. It's going to be bright. The opportunities are huge. And see, price doesn't even have to go back up there. It could just be like boom, boom, and I'm just going lower. I'm on a mission to hit these lows, make everybody feel like we're gonna run, lower. But as soon as we hit this 5-minute fair value gap, I'm gonna trick everybody, and I'm gonna go back up to all-time highs. The algorithm could do that. Kelsey, it's so crazy. I love trading. As long as you're smart about it and patient with learning, you will win eventually. Yes. 100%. Give yourself the time, though. Allow yourself that time to learn. Give yourself permission to not make any money, but to learn. Give yourself permission. Tell yourself, Tyler, I'm okay with not making any money. I'm okay with demo balling because I want to learn the strategy. I want to learn to execute and be patient. And when I say demo balling, guys, I'm not talking about just clicking because, it doesn't cost me anything. I'm going to click. I'm going to try it now. I'm going to see what happens here. No, stick to your strategy. Stick to your model. Don't trade anything else when you're demoing and see if you can be profitable. Then you go into an eval account and you do it on an eval account for $20 and see if you can handle do that same thing and keep yourself from overtrading. If you overtrade when you're demoing and you're learning the strategy, you're kicking yourself in the foot. Guys, I'm saying this from experience because when I demo traded, well, first off, I didn't start off demo trading. I went straight to money and I lost thousands of dollars doing that. When I started demo trading, then I would just click buttons and I'm like, I'll just try it. Let's see this. Let's see this. Let's see this. No, read price. Don't click. Only click when you see your opportunity. Only click when you see your model and your setup form. Then take the entry, set your stops appropriately, and let price play out and see if it's a win. When it's a win, that's right. I'm going to do that next time. That is how you build that confidence in trading, knowing that it's a winner. When you're clicking and clicking and clicking, you're not building that confidence. You're missing out on the opportunity to build confidence that the selections you chose actually turn out to a win. That's how you build that trading confidence. It's screen time. When you're clicking, that's screen time, but it's just freaking gambling. You cannot gamble. I'm saying this from experience because guess what I did for over a year? I gambled and I lost thousands of dollars doing it. So, man, guys, anybody, it is so possible to replace your income with this industry in a matter of a couple clicks. I was in that trade. Sorry, I'm getting emotional about this because this is what I want to do. This is why I'm here. I want to help you. I want to help others see the reality and the potential that trading can offer if they're willing to put in the work. I saw this quote. Somebody said, I saw this quote on X, and it said, many of you say you're committed to trading, committed to your success, but you're not committed to the actions that are required to become successful. Listen to that carefully. Many of you say you're committed to becoming successful in trading, yet you're not committed to the actions required to become successful. What are the actions required? Not gambling, not over trading, only trading your setup, only trading your model, price reading, refusing to gamble, refusing to say, this is momentum, I'm just going to see what happens. That right there, that is how you build that confidence. It's so doable, guys. So doable. You can do this. You can do this. We can do this. All that from 8 handles. Woo! Anyway, guys, I think that's going to be a day right there. 2 hours on stream. Thanks for being here, guys. If you got questions, put them in the comments. Happy to answer them. Check out that video that I posted yesterday that talked about trades by Matt, where he lost $91,000, where we go through going on tilt. Very, very, very powerful. Thanks for watching, guys. And I won't be on tomorrow. I got work-related meetings that I have to attend. But more than likely, we'll be on Wednesday. So thanks for watching, guys. And we'll see you next time. Take care.